In this video last week, I highlighted 4 stocks, now up an average 13% in just 4 trading days, with my top stock up 30% in the last week alone. But those 4 stocks are all long-term millionaire makers, stocks that aren't doing just 30%, but 3,000% over the next 5 years. This week, I'm going to reveal 7 stocks to buy for right now, stocks for 2 scenarios that will control market direction for the rest of the year: the coming war with Iran and the AI arms race. I'm going to show you stocks for each scenario, and then one stock that's going to make money on both. And first up here, Nation, June 2025 will be remembered as the moment the United States went to war with Iran. What began as a tit-for-tat strikes between Israel and Iran has exploded into an all-out war. And do not think that the president's 2-week ultimatum for Iran changes anything. I'm going to show you why US involvement is all but given and the 3 stocks you need to be buying right now. This all started June 13th when Israel sent 200 fighter jets to strike over 100 military and nuclear targets in Iran, including facilities at Arak, Natanz, and Fordow. The price of oil surged as much as 13% on the day, with Iran retaliating with missiles of its own and vowing to target US and allied bases. The US has already helped Israel shoot down some missiles and drones, but hasn't made any offensive strikes yet. And understand that all this goes way beyond Iran's ambition to develop nuclear technology, now enriching uranium up to 60%, which is very close to weapons grade. And while weaponization could take longer, it's on a collision course with the West. Iran sees nuclear weapons as its only safeguard against an attack like what we're seeing right now, while Israel and the West see no option but to stop it now, before it gets those weapons. As of yesterday, Bloomberg reported officials at the Pentagon were preparing for the possibility of a strike on Iran in the coming days. That deadline may now be postponed with President Trump's 2-week ultimatum, but it changes nothing. The president, poised to seize his moment as a wartime president, has already demanded Iran's unconditional surrender and has already approved strike plans, but has not ordered the assault. Nation, this is the kind of crisis we see only once in a generation. A direct strike on Iran would shake the global energy market and redefine geopolitics. That's because Iran controls the Straits of Hormuz, a choke point for oil shipments out of the Persian Gulf that sees 1 in 5 barrels of the world's entire supply pass through it. And while the US and allies could take control quickly, a disruption would immediately send oil surging higher. Oil and defense stocks are already running, anticipating that almost certain involvement of the US, and you need to be ready for this. Oil stocks in the S&P 500 are only up 1.7% since that first strike, but have further to run when the US gets involved. Capital Economics estimates oil could rocket to $130 or more if fighting drags on, an increase of 68% from where crude closed on Wednesday, with an initial strike sending it up to the $90 a barrel. Here you want to focus on oil stocks with 100% US production, like channel favorite Diamondback Energy, ticker FANG, which produces 493 million barrels a day exclusively from the shale regions in Texas and New Mexico. Or Devon Energy, ticker DVN, with its 2.8% dividend and mostly shale oil production, but with some conventional oil plays as well. And that US shale oil production is important because as a higher cost production alternative versus the conventional oil fields, shale producers see their stocks boom when the price of oil jumps and rationalizes those costs. The United States Oil Fund, the USO, is a more direct play on oil, with the fund set to track the daily price changes in crude. I like the oil company stocks better for a longer-term investment, but options on the USO give you a leveraged way to play the possibility of a surprise strike against Iran. For example, we can go here to the options available on the USO, and we'll use those expiring in 1 week to cover a weekend strike possibility. Of course, now with the president's 2-week deadline, you're going to want to push this strategy back about 2 weeks, but the strategy remains the same. A US bunker buster against Iranian nuclear facilities would send the price of oil spiking, and this USO easily back past $90 each. That means we can buy the $85 strike calls, which gives us the right to buy the fund at that price and pay $2.40 each, but at the same time selling the $90 strike call options for $1.44 each. Our net cost is just 96 cents a share. If the fund does shoot higher past $90 each, that position would be worth $5 a share for a 420% return in just 1 week. Defense stocks would also get a boost from the US escalation, with the Global X Defense Tech ETF, the SCHLD, a good starting place, not just to buy the fund, but for also stocks to buy. This is my favorite way to use ETFs, going into the holdings and mining for those top stocks. Here we can see all 42 stocks held in the fund, and it's these top 10 that you want to focus on. The highest conviction picks by the manager, with 61% of net assets just in these alone. Within these, RTX Corporation, ticker RTX, the old Raytheon, is likely the most to benefit from a US war. That's because Iran's strength is in its ballistics and cruise missile stockpiles, so Any US involvement will immediately trigger demand for missile defense systems, of which RTX specializes. The company makes the Patriot missile system and NASAMS and is a key developer of the THAAD system with Lockheed Martin. Gulf allies like Saudi Arabia, the UAE, and Qatar are all major customers of RTX as well and would all be renewing those contracts. And gold, already up 28% this year, would rise further as investors rush to that safe asset in a war. But like the USO, instead of just buying shares of the GLD Gold Fund here, which pays nothing while you wait, you can use the covered call option strategy to get that upside, plus create some income. Buying 100 shares here and at the same time selling a call option at a $315 strike for July means you collect that $480 cash right now on the position, a 1.5% dividend yield in just 1 month. If the price of the fund does go to $315 over the next month, you'll make an additional 1.5% for a total annualized return of 42%. And if not, you just keep on selling those call options every month to collect that cash flow. Now, I know all the options jargon can be confusing, but honestly, folks, when the stock market is as volatile as it is right now, like a 5-year-old hopped up on Pixie Sticks and Mountain Dew, option strategies are a must-use tool for not just higher returns, but also to lower your risk and create that income. To help you get started, I'm extending the relaunch of our Ultimate Options course. Over 3 hours of video, I start with the basics, then walk you through 29 option strategies, where to use each, and how to set it up, including a real-world example with shares of Tesla. Right now, I'm relaunching that course at a 38% discount. Save $150 off, but only for the next 3 days. You're going to get all the basics to get you started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much you can make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. That $150 launch discount is only available with the coupon code in the link I'll leave in the description, so look for that or scan the QR code here. That second market-moving scenario, the AI arms race, is something that we've been talking about all year, and besides the stocks I'm about to show you that are going to directly benefit, I've also found one that's going to boom higher from both of these scenarios, Iran and AI. That race to develop artificial intelligence is nothing new, but is shifting into an even higher gear over the next 6 months, and you need to be ready with these stocks. In research I'm preparing for Monday's video, this week we heard the most honest assessment yet from Amazon CEO Andy Jassy about how AI is going to affect jobs, saying, quote, "As we roll out more generative AI and agents, we will need fewer people doing some of the jobs that are being done today." In that memo to employees, Jassy went on to say how AI would shrink the workforce, and all this comes after Microsoft announced last week that it would be cutting up to 10,000 employees over the next year. Nation, you have got to get out in front of this because nobody's job is safe, and even the jobs that will survive over the next 5 years. If AI is doing half the job, do you really think you're going to be getting paid the same amount of money? Now, we've already seen shares of Nvidia surge with the stock up almost 1,500%, 15 times your money over the last 5 years. And you know shares of Advanced Micro Devices, ticker AMD, are my second biggest position, almost $300,000 worth on 2,500 shares. The AI arms race started with the semiconductors that are the processing power, the neurons firing that make artificial intelligence possible. And while Nvidia has the clear advantage in performance, AMD is no slouch either, and is about to get a big boost when AI passes from the training stage to that inference stage where processing isn't as compute intensive, but we're going to still need just as many chips. NVIDIA GPUs cost upwards of $25,000 each, and we're hearing lately of more hyperscalers shifting to AMD for its less expensive chips. AMD's 300 series, especially the 350 upgrade launched later this year, is going to feature a 35 times performance increase, all very competitive with NVIDIA's Hopper H100 chips on inference benchmarks. Dell recently announced it would be using AMD chips for corporate customers for the first time, where it previously only used AMD for consumer PCs. IBM has also said that it would be using the AMD 300 series in its cloud services starting in the first half of this year. Shares of AMD have jumped more than 60% since April as analysts finally see what I've been talking about, but this one is worth $150 a share minimum. Revenue is expected up 23% this year to almost $32 billion, with another 18% growth next year. Our shares aren't as cheap as when I first started buying, but are still a great deal on that kind of growth at just 7.5 times on a price-to-sales basis. On that forecast for $32 billion in sales and even an 8x price multiple, you get a market cap of $256 billion, or $156 per share. And that is just the beginning here. But as hot as that AI chip market is, you always want to be ahead of the themes driving the market. So we want to follow the AI supply chain from those chip makers like AMD and NVIDIA into the servers that are just now seeing giant demand in that data center buildup. That's because if semiconductors are the neurons, then servers are the brains, holding dozens, even thousands of chips to process those AI workloads. JP Morgan estimates that just the 5 AI hyperscalers, Amazon, Apple, Alphabet, Meta, and Microsoft, We'll spend $1 trillion building out those data centers, and much of that is going into servers. And here, only Super Microcomputer, ticker SMCI, dominates the AI server space with a controlling share of the market. SMCI grew revenue by 110% last year to $15 million, doubled its revenue in a year when the short sellers were all screaming that the company was dead. So imagine what it can do right now. Revenue is expected up another 60% this year and 40% next to $33 billion, and that revenue trend just keeps on going. Now against this, even on a 45% return this year, shares are still ridiculously cheap at 1.3 times price to sales. Now remember, I said AMD was cheap at 7.5 times price to sales, and it's 23% pace of revenue growth. And here we have a company growing sales by 60% and priced at a fraction of that. Shares of SMCI could be 3 or 4 times where they are right now and would still be considered cheap. In fact, in my research of the 60 AI-related stocks, shares of SMCI were by far the best deal on that growth-adjusted basis, which is why I own over 24,000 shares worth more than $1 million in my own portfolio. But now the top stock in the week, the one that wins in both that Iran and AI scenarios, shares of Palantir Technologies, ticker PLTR. And while this stock is still ridiculously expensive at 111 times on that price to sales basis, remember, we could buy those shares of SMCI for just 1.3 times sales and get a company with an even faster pace of revenue growth than Palantir. But you just cannot ignore this company's future. Not only is Palantir growing its commercial systems revenue by 71% over the last year, growing it to $250 million and booking remaining deals valued at $2.3 billion, but it showed no signs of slowing down on government defense contracts either, with segment revenue up 45%, major contracts with the US Army and NATO. In fact, looking in that defense tech ETF, the SHLD, you see shares of Palantir are the second largest holding at 8% of assets, worth $215 million. Now at $139 a share, the stock is getting harder to pick up unless you buy fractional shares, so I want to show you how to get the same exact exposure to Palantir upside, but for just $3.47 a share. It's called the synthetic long option strategy, and it gives you the same upside in a stock's price at a fraction of the cost. That's because the synthetic stock is exactly that, a way to get the same payoff in a stock from just options, and it really just shows the power of options investing. And this is one of the easiest strategies as well, just buying a call and selling a put option at the same strike price. Here I can go to the January 2026 options on Palantir, so I have that longer term holding period, and I can buy the $140 strike call options for $28.52. While selling the put options to collect $25.05 each. That means my cost per share is just $3.47 each. I can get the same upside on 100 shares for $347, instead of having to pay almost $14,000 for the stock. And here in the options calculator that comes with the course, you can see that gives you the exact same exposure to buying the stock, the upside and downside, all for a fraction of the cost. Get your $150 coupon and see how I use options investing to boost returns, lower my risk, and create income with our ultimate options course. Go step by step into 29 option strategies, get the options calculator and all with a 14-day risk-free trial, all with the link in the description below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.